Good morning, Trinidad and Tobago, and on behalf of the entire team at Bourse, we take this opportunity to wish you a very happy and successful 2019. Well, today on the Bourse Report, we review what has been quite an eventful year in terms of investing in both the international and local stock markets. In the case of the local stock market, there were several events which supported and hindered the progress of share prices, and overall there was a relative stability in stock prices as evidenced by the Trinidad and Tobago Composite Index. For international markets, on the other hand, there was very little place to hide as most markets registered a decline for the 2018 period. So let's take a look at the international markets firstly, and there were several drivers which influenced performance. In the first case, economic activity, and in the case of the Trinidad and Tobago economy, there was somewhat lackluster economic activity and consumer activity, as well as the prospects of increased unemployment led to an overall decline in investor confidence. And there was a marginal increase in interest rates as well, with one interest rate hike coming earlier in the year where the repo rate increased from just around 4.75% to 5% by the central bank. This was in contrast to what occurred in Jamaica, the other major regional equity market, where economic activity was bolstered by lower interest rates, which actually increased consumer activity and borrowing, in fact, and led to an overall increase or improvement in investor confidence, and overall led to a much more buoyant stock market. In particular, the Jamaican stock market was up just around 32% for the year 2018 in Jamaican dollar terms, while the All Trinidad and Tobago Index declined just around 1.9%. Now, the other key driver that supported market activity and market performance was acquisitive activity or acquisitions and the announcement of acquisitions. And three of them stood out in the year, and they all occurred in the latter half of 2018. The firstly being Republic Financial Holding Limited's announcement of a 74.99% acquisition of, or proposed acquisition of, Cayman National Corporation, one of the largest banking and financial services companies in the Cayman Islands, as well as several regional banking operations from Scotia. Secondly, the recent regulatory greenlighting of NCB's pursuit of up to a 62% stake in Guardian Holdings Limited also lent some significant support to both the share price of NCB Financial Group stock as well as Guardian Holdings Limited, and this all occurred towards the end of the year. And of course, Alinvest's proposed acquisition of Sagicor Financial Corporation, which is expected to take place sometime in 2019 at a price of between $10.90 TT and $11.90 TT equivalent, based on how many shares you're holding, would have led to a jump in the price of Sagicor as well. And as we can see, the All-TNT index measured by the red line was pretty much flat throughout the year, reflective of very weak or weaker conditions in terms of economic activity. The cross-listed index was a lot more volatile as measured by the green line, and eventually, because of some of those announcements of acquisitions, did spike and jump to just around a 12.2% increase for the year. And overall, the Trinidad and Tobago Composite Index, which is a combination of both the All-TNT and cross-listed index, was up just around 2.9% year to date. Now, at a more granular level, we look at some of the major decliners and some of the major movers, both in terms of positive and negative movements. And as you can see, NCB Financial Group and Sagicor Financial Corporation were up just around 36 and almost 15% respectively. And both of these stocks are on the cross-listed index. Agostini's Limited was also up just around 13%. TTNGL was up just around 10%. And Guardian Holdings, as mentioned, because of the acquisitive activity announcement, was up just around 6%. On the other end of the scale, most of the stocks, which were the lower performers for the year, were in the consumer and manufacturing related businesses. National Enterprises Limited was down just around 18%, Unilever Caribbean Limited down 20%, One Caribbean Media down 21%, Trinidad Cement Limited down 27%, and Prestige Holdings down just around 31%. Switching gears to the international space, and it was really a year to forget for investors in international equity markets. There was a seemingly insurmountable wall of worry to climb, and markets really gave up towards the end of the year. And some of these factors which drove markets lower included the continuing threat of trade tensions between US and China, which led to an overall lowered expectations of economic growth at the global scale, not just for China and the US. Higher US interest rates led to a stronger US dollar, which all had a negative impact on investor expectations, who expect that the US, which accounts for just around 1/4 of world growth, or world GDP rather, would experience some stalling in the economy as interest rates disincentivize persons from borrowing. And overall, there was a commodities correction in prices after a very significant 9 months of robust oil and gas prices. There was a collapse, for want of a better word, in the last quarter, where oil prices, or WTI prices, fell from just around the mid-70s level to its current level of just around, bouncing between the $45 to $50 a barrel level. Now, all of this has been reflected in the performance of regional equity markets, and as we can see, the green would actually show 2017 performance, and you can see it was pretty positive, with returns ranging between 19 and 38% across the major regions. And in 2018, it has been quite the opposite. There has been really nowhere to hide, with Europe on the heels, with Brexit concerns, as well as the end of stimulus by the European Central Bank declining just around 17% in US dollar terms. Asia, ex-Japan, down just around 16%. And in fact, China, the Chinese stock market was down almost 30% in US dollar terms. The Latin American space, despite several short-term boosts from political changes, did decline because of weaker currencies and the commodity correction, just around 9.3%. And the US, after being up as much as 9.6% towards the end of September 2018, collapsed to just a decline to register a closing level of 6.2% lower from the start of 2018 to the end of 2018. So what's in store next year? Where could the markets go? What are some of the drivers? And what should you as an investor do? Well, tune in next week as we discuss these and more issues. That's it for this week's edition. For more information, give us a call at 226-8773 or 2BORSE. Visit our website at bourseinvestment.com or email us at invest@boursefinancial.com. Have yourselves a wonderful investing week. This has been the Bourse Report.